Iron ore collapses. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because the price of iron ore, well, she's heading down. Let's have a look at before we look at this article here, let's just jump over. I did the stinger again when I didn't mean to, but we can see here the iron ore price now is sitting at $113.50 US cents, and well below $220 where it was, riding high. And of course, that's having an impact on our economy. The government budgets for iron ore to sit around $50 US, so there's still a bit of room to move. But let's have a look at this. So this is from mining.com. The iron ore price collapses below $100 as China extends environmental curbs. Now, here's the thing. If we start to see more negative news out of China and there's more calls for investment and construction and stimulus, this may completely change overnight. What do you think will happen? I know everyone's watching Evergrande there and their potential falling over and the implications that has. So there's a lot of fear out there at the moment, a lot of fear and a lot of concern. So the iron ore price sank below $100 a ton on Friday for the first time since July 2020, as China's moves to clean up its heavy polluting industrial sector spurred a swift and brutal collapse. The Ministry of Ecology and Environment said in a draft guideline on Thursday that it planned to involve 64 regions under key monitoring during a winter air pollution campaign. The regulator said steel mills in those regions would be urged to cut production based on their emission levels during the campaign from October until the end of March. I wonder if this is the real reason. Stringent production controls have driven market prices lower recently, and pessimistic outlook for demand have intensified, analysts with Steel Futures wrote in a note. Prices have more than halved since peaking in May, as the world's biggest steelmaker intensifies production curbs to meet a target for lower volumes this year, and a sharp downturn in China's property sector impacts demand. Iron ore's slump makes it one of the worst performing major commodities and a notable outlier in a broader boom that's seen aluminium soar to a 13-year high, gas prices jump, and coal futures surge to unprecedented levels. Iron ore futures have slumped more than 20% this week and were trading at $99.55 a ton Friday morning in New York. The decline has played out faster than expected, said UBS's Group AG. UBS predicts prices will average $89 next year, a 12% cut to its previous forecast. Iron ore producers Rio Tinto Group, BHP Group, Val SA, and Fortescue Metals have seen their shares tumble, and we'll have a look at that. Meanwhile, steel prices are still elevated. The market remains tight of supplies as China's production cuts significantly outpaced declining demand, according to Citigroup Inc. Spot Rio is near the highest since May, albeit 12% below the month's high, and nationwide inventories have shrunk for 8 weeks. China has repeatedly urged steel mills to reduce output to curb carbon emissions. Now winter curbs are looming to ensure blue skies for the Winter Olympics. There you go. There's the real reason. It's political. So let's have a look at, the market sentiment for Fortescue, Rio, and BHP. And this is from SelfWealth, one of the brokers I use, where you can get all the information from their community. So we can see it's at $15.27 AUD for Fortescue Metals Group, down 11.48%. That's almost a crypto move, guys. So there you go. We can still, they're still making a profit, and their last dividends were quite healthy. I don't know if they're going to be able to produce those dividends moving forward. Now, here's the community ownership. And we can see everyone in the bottom is buying, in the top are buying, in the middle they're selling. I mean, here's the question. Is this an opportunity? Or is it time to get out of the market? Or just to sit and wait? We can see here in the last 3 months, 63% have been buying and 37% have been selling. The majority are buying for good dividend-paying stock, while 37.4% are selling for other reasons. So that's taking profits. I wonder if it's just fear. We can see here it's trending down, and it's at a year low now. It is almost at a year low. That doesn't mean it can't go lower, guys. And here we have the forecast. 77% are bullish, while 23% are bearish on Fortescue Metals. So what do you think, everyone? Would you jump in to Fortescue? Or do you think it's heading down? Next is Rio. They're down 4.7%. They're at $98.80, undervalued by 28.5%. We can see, there you go. There was their dividend, $4.64. So, if at under $100, not a bad dividend. If we have a look here, we can see people are buying at the bottom, and everyone from there to the top are selling. And we can see selling. 41.9% of those selling, which is 37%, are taking profits, while 63% are buying as a good dividend-paying stock at 23.5, and stock is undervalued at 22.5. We can see there it's trending down, down 20% from where it was. Look at over $120. There you go. Also, the year high is 134, and the year low is $87. So it's heading back down. And the recommendations are slightly towards a buy, with the majority of people bullish, everyone, at 76%. Now, let's have a look at good old BHP. They're at $39.16. They're down 3.67%. We have a look here. Their ex-dividend, the dividend was $3.01. The last one they paid, not bad. We can see here, bottom is buying, everyone else is selling. They're getting out of it. It's ranked number one, ranked by ownership on SelfWealth. There you go. So the number one share that people own is BHP. Of those 37% selling, 39% of those are taking profits. Those buying, nearly a quarter, which is 63% of buying, are looking at aligning with a target portfolio. That's the opportunity you can have on this platform to align with other people's portfolios. All the stock is undervalued. We can see here it's definitely down. The year high was at 54.55, and it's down to a year low of 33.73. So it's $39. It's trending. It's at the lower level. And we can see the sentiment is buy. 78% are bullish and 22% are bearish. So there we have it, everyone. Iron ore has collapsed. What's the solution or the takeaway to this one? Well, here's the question. Are these opportunities? Is this, is the market, is the price of iron ore going to rebound? What is the latest news coming out of China? There's a lot of fear about their construction sector here. And, well, these businesses are still going to be profitable. Other shares are still going to be, worth what they are. Are we just seeing a lot of fear in the market? Unknown, or are these businesses just tumbling down? What do you think, everyone? Are you jumping in? Are you going to wait? Or are you not invested at all? Let me know your thoughts and opinions on these ones in the comments down below. Thank you all for watching. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time. Bye for now.